This is an Uncovered Japan company research report on IDEA Consultants, ticker 9768. IDEA is a Japanese environmental and construction consultancy that surveys, analyzes, models, and designs around coastal, marine, environmental, and public infrastructure projects. This video follows the report's evidence on its specialist niche, financial profile, policy exposure, valuation, and the risks an investor should watch. At the report's reference price of 3,465 yen, IDEA traded at 10.3 times forward earnings and 0.8 times book value, with a 3.4% dividend yield. The report scores it 15 out of 20, led by Macro Fit. The low valuation reflects a small, thinly traded company with only 8% return on equity. So the case is not simply that the shares are cheap, it is whether a specialist business can translate favorable policy demand and excess capital into better returns. IDEA does not build dams, roads, or wind farms itself. It sells the expertise that surrounds those projects: field surveys, environmental analysis, numerical modeling, impact assessments, and design. The visual captures the business in one frame: marine research, offshore wind, water infrastructure, and underwater observation. The report identifies specialist equipment, certified laboratories, survey vessels, and autonomous underwater vehicles as part of the practical advantage. Those assets matter because a rival cannot credibly replicate deep water or trace chemistry capability just by adding salespeople. The operating structure is concentrated but understandable. Environmental consulting contributed 64.8% of sales at a 12% margin. Construction consulting contributed 29.7% of sales, but at the higher 15.2% margin. Together, those two segments accounted for 94.5% of sales in fiscal 2025. Information systems is still small, while overseas was loss-making. The essential point is that IDEA is not a broad conglomerate. It is a focused, two-engine public technical consultancy with a few smaller options attached. The financial history supports the idea of a steady specialist rather than a high-growth story. Revenue increased from 20.6 billion yen in fiscal 2021 to 24.6 billion in fiscal 2025, a 4.5% compound annual rate. Operating profit rose from 2.55 billion to 3.19 billion yen. Fiscal 2025 revenue still reached a record, although operating profit dipped 2.1% as personnel, priority field, and digital investments were brought forward. The report treats that as capacity-building spending, but margins and order intake remain the evidence to monitor. IDEA's competitive advantage rests on scarce qualified people, owned specialist equipment, and decades of public agency delivery. The report counts 1,033 license holders in fiscal 2025, including engineers and specialists in marine surveying, environmental measurement, and meteorology. Japan's technical proposal procurement rewards those capabilities and a relevant project record, rather than simply the lowest price. But the chart also shows the trade-off. The Ministry of Land, Infrastructure, Transport and Tourism, Defense, and the Environment together supplied 50.5% of sales. Stable government demand is also real concentration risk. IDEA's balance sheet is unusually strong. At fiscal 2025 year-end, the equity ratio stood at 81.2%, while the report estimates net cash of about 2.6 billion yen. That protects the business in a project-based industry and gives management flexibility. But it also frames the valuation problem. Return on equity was only 8%, and the shares traded at 0.8 times book value. The report's central capital allocation question is whether management can deploy or return excess capital well enough to lift returns toward a level the market will reward. The cash flow chart needs to be read across several years. Operating cash flow ranged from a small negative figure in fiscal 2023 to 4.01 billion yen in fiscal 2024, before reaching 1.20 billion in fiscal 2025. This does not necessarily signal a collapse and rebound in earning power. It reflects receivables, contract assets, advances, and Japan's public work delivery calendar. Across the 5 years, cumulative operating cash flow was about 10.9 billion yen. Investors should therefore track cash conversion over multi-year periods rather than extrapolating 1 year. The macro case is unusually concrete because IDEA's customers are public agencies. The report links more than half of sales to national resilience spending, environmental regulation, including PFAS, defense and marine security, and early offshore wind activity. Environmental chemistry order intake grew 14.5% in fiscal 2025, while defense ministry sales grew 8.1%. But policy alignment is not an automatic growth guarantee. The binding constraint is the supply and retention of qualified engineers, alongside wage inflation, tender competition, and the small but persistent overseas loss. Valuation requires context. IDEA's price-earnings ratio spent several years in a roughly 6 to 8 times range, then re-rated to 11.9 times in fiscal 2025 as capital return action improved the story. At 10.3 times forward earnings in the report, the shares were no longer the old 6 times value trap. They still looked inexpensive against some sector comparisons, but the multiple already assumed that dividend, buyback, and capital policy progress would continue. The catalyst is not just earnings growth, it is whether the re-rating holds. The report's author estimated 3-year scenarios make the valuation sensitivity clear. The fiscal 2028 bear case is 2,053 yen. The base case is 3,534 yen, around 2% above the reference price. And the bull case is 5,025 yen. These are scenarios, not targets or recommendations. The base case assumes earnings per share grows at roughly 4% annually, but the outcome is dominated by the applied multiple. That makes capital policy, order conversion, and market confidence as important as the underlying profit trend. To conclude, IDEA Consultants is a real specialist in environmental and marine technical work, with rare expertise, government agency track record, stable double-digit operating margins, and a notably strong balance sheet. The favorable case rests on policy-linked demand in resilience, PFAS, offshore wind, and defense. The constraints are ministry concentration, limited engineer supply, wage and bid pressure, low return on equity, thin liquidity, and a loss-making overseas segment. Investors should watch order growth, core segment margins, engineer capacity, capital return actions, and whether return on equity can improve. This is educational research, not investment advice. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.